Good morning, everyone. It's great to be here in your absolutely beautiful country. I feel very, very privileged to be able to speak here today. And I just really wanted to say thank you very much to Steve for an absolutely awesome conference. I've been impressed from start to finish. I'm even impressed by the stage I'm standing on. I feel like I should be doing a dance rather than speaking about something as boring as risk and security. I'm going to talk to you today about the intersection between security and innovation. Now, for those of you who don't know me, when I'm not being a payment geek, I climb mountains. And so firsthand, over the weekends, I experienced this balance between security or risk and reward. And so in order to get to the top, I have to make calculated risks and overcome and absorb potential dangers on a regular basis. This is a picture in your beautiful country last year in November when I was preparing for a trip for Antarctica in the Mount Cook region. I was there on the weekend again, and I've just come back with only good things to say about the beauty of the country. What I'm going to talk to you about is really in three areas. So I'm going to talk to you a little bit about the digitization of our economy. I'm going to talk to you about what that's transpired into in terms of fraud. And then I'm going to talk to you about our response to that. So digitization, fraud, and our response. It's really quite a simple message that I'm sharing with you today. And insofar as the digitization goes, there are a couple of really interesting indicators, and these stats, the percentages represent both Australia and New Zealand, in fact. And so we're way over 80% for certainly most of the mobile penetration. But what we are seeing that I find particularly interesting is that we're moving away from desktops to a more mobile environment. And so although tablets and wearables have a low penetration right now, their growth rate is massive. And so the adoption rate is exponential. And these things all really talk to the way in which we pay. And so what I find particularly interesting when you consider this boring link of the different ways to pay is that in 1980, we spent, almost 100% of our transactions were done with checks in value and 80% by volume. Now, that's 1% versus 7%. That's taken 40 years for us to get to the stage of really weaning ourselves off checks. So we've seen development cycles changing fundamentally over the past decade. And what previously would have taken us a 40-year journey to transition is at the moment taking us decades. So if we see, if we have a look at the, think about the stats relating to cashlessness, our cash has dropped from 69% 10 years ago to 37%. So it's almost halved in terms of what we're using to pay. And so while it's taken 10 years for us to get there and our card volumes have picked up by 50% over the past 10 years, those cycles of development are becoming even more rapid. And the digitization and the use of mobile is meaning that we're moving from a hardware environment to a software environment. And that means that our development cycles for introducing new products is that much more rapid. So this just gives you a sense of the rapid growth of cards in the Australian market. A year ago, cards and cash crossed over, meaning that we now use cards more than we use cash to make transactions. And we're seeing dramatic growth, particularly in the debit space. So debit has grown 50% in less than 10 years. One of the really important leading factors in this cashlessness is the technology related to tap and go. Australia is the highest tap and go user in the world, followed closely by New Zealand. And customers have been taught by the schemes and by the merchants to trust and to tap and go. And that's really paving the way and introducing a willingness to use mobile phones or to use more immediate technology. What we're seeing is that combined with this move away from cash and towards more digital forms of transacting, we are now introducing and becoming a lot more familiar with making payments on the internet. And I was surprised to see the stat that Australia has the highest growth rate for the e-commerce environment, which means that all of our transactions are moving online. And so what am I saying? We're moving effectively from an analog world to a digital world. We're moving from a world where all our cryptography, all our development, our product life cycles were embedded in the hardware device, the point of sale device in most instances, to a software world where software development cycles are fundamentally much faster than those of hardware. We're moving from a world of cash into a more digital world. And we're moving from face-to-face to online, as you can see by the 40% growth rate in e-commerce. We're moving also from automation to AI, and we've seen a lot about that in the last in the last day and a half. So I won't dwell on that. And this really brings me to the second point that I wanted to talk to you about, which is security. Now, security is unfortunately experiencing the same trend and the same exponential impact as the growth rate in the digital world. And so we as normal citizens wouldn't really spend much time thinking about it, but as much effort goes into unicorns to build cybercrime labs as goes into product environments. The problem is that we're not putting as much effort into improving the fraud as we are into developing new products and as the cyber criminals are into attacking our environment. The issue also is that the crime is exponential, and we build algorithms not in a linear way. We don't think in the same way as the criminals do. And so many of the algorithms and many of the solutions that we built are ineffective. So effectively, I wanted to ask you, for those of you who didn't have too much wine, what's wrong with this picture? Brian?
Yeah, well, if you rob a bank, you go to jail.
Right, Brian's a banker, and he says, if you rob a bank, you go to jail. What would the fintechs say? I can see a couple of fintechs in the room, and I think that what they're saying is, this is not scalable. And so the real problem that we're facing is, from a security perspective, the number of fraud events are escalating exponentially. Facebook has 600,000 malware attacks per day. Research estimates that 99% of us, that means 99 out of every 100 people in this room, don't update their software on their computers. Research by IBM shows that 95% of fraud is caused by people who should have known better and who make personal mistakes. So what I thought I'd talk to you a little bit about is just a Home Depot breach, which was very well publicized. Many of you have probably heard about it. And the point of the matter is that the threat surface is expanding, and we're having more and more connections, and the more technology is introduced in a fragmented way, the more opportunities there are for fraud. And so Home Depot is the largest home improvement company or retail outlet in the US. In 2014, 56 million of their customers' details were stolen, and that is estimated to amount to 10 billion US dollars in loss. There we go. Sorry about that. So 10 billion US dollars in loss. What happened is the criminals used a vendor's entry into their system. They embedded malware in the self-checkout environment, and they bled card details for a number of months before it was identified. 56 million customers. Now, Attila the Hun overcame hundreds of thousands of people when he was at war. He was a kick-ass bad criminal, but yet he couldn't reach 56 million people overnight. And so what actually happened in the US is that because of the weak authentication that the US system had in place at the time, the criminals were able to use the zip codes related to where the transaction happened, because most transactions happen in your home area. Use the card details, go online, spend 20 cents per card holder value, and obtain all of the information that was required to change PIN numbers. Name, date of birth, and they were able to also identify social security numbers. And by changing the PIN numbers, they were able to go in and draw out cash from ATMs. And so these sorts of things are happening on a really grand scale. And we're seeing that in Australia. So I'm now on to the actual fraud stats. Fraud has rampantly increased in terms of card not present fraud. So when chip and PIN was introduced, it very effectively removed face-to-face fraud. And if you just don't even look at what the PI's titles are, but use the color, the eye check, green is card not present fraud, and you can see how that's dramatically increased. And so what does this mean for security? A well-known quote is that the future is already here, it's just unevenly distributed. And effectively, what we're seeing going forward is multiple different technologies that will be improving our day-to-day life experience, but they'll also be introducing new ways and new fraud types. And unfortunately, we're struggling to keep up. So how to balance the security with the innovation? We had an industry collaboration. For the first time, we had many of the retailers, the payment gateways, the issuers and the acquirers in the room, and surprisingly, all agreeing on the same priority. We agreed to create a framework, and we gave ourselves 6 months. We're in the process of socializing that framework, and the framework identifies a couple of principles. The principles are really about taking advantage of modern technology, using risk-based authentication, i.e. not everybody is authenticated every time, ensuring that we increase e-commerce volume, because of course that tension between creation and the accelerator and the handbrake for retailers is a very real problem. We don't want cart drop-off, but we also want to reduce fraud. And of course, applying global standards. And so we've created a framework together with the industry, and we're busy discussing that with the industry right now. And that framework is very much aligned to what we're doing, what we're seeing in Europe, which really is that there are various triggers and various thresholds that both acquirers and merchants need to stay within in terms of the fraud as a percentage to their overall transaction volumes, and that may be on a once-off basis, it may be cumulatively, or it may be per merchant category. Those are the various different categories that we're looking at. And we're busy negotiating with the industry now exactly what that percentage will be. And you can imagine that'll be a pretty interesting discussion, because if we're talking to bottle shops or high fraud categories, that percentage is dramatically different to when you're talking to merchants with lower categories. Now, we are also working with industry, collaborating. We have a collaboration with industry, including law enforcement and various other participants, where we share data. We've agreed standards, and we are introducing a digital identity framework in Australia. I was very pleased to hear about that earlier in the conference, and we'll talk more about that. And then, of course, tokenization and risk-based authentication using geolocation, etc. So there's an enormous amount of work happening in the card-not-present fraud space. We are reacting quite strongly to the shift to a software environment where you're seeing PINs being input on glass, and the complexities and the new challenges that introduces. And we have been part of a number of global standard bodies that have set these standards. Thank you very much for listening.